What's going on, guys? Welcome back to another video here. In this one, we've got some awesome trading tips for you guys to really turbocharge your success in today's market, whether you're a day trader, a swing trader, forex, options, futures, shares, whatever you like to do. So again, guys, without further ado, I don't want to waste any of your guys' time. If you guys wouldn't mind hitting that like button down below, dropping a comment if you enjoyed, and hitting that subscribe button if you guys want to see some more videos like this. But the main premise of this video here, guys, is I know you guys have seen me, if you've been around this channel for a while, hitting these gargantuan options gains, these 600% trades, 400%, multi-1000% trades that, again, we call out to you guys that are in the swing trading curriculum. But the most important thing, and people talk about this a whole lot, is it's not about as much as how much you're making, but it's how much you lose when you lose. And we tie that into risk to reward, which is something that we talk about all of the time. But there are a lot of instances where you can actually risk a lot less than what you actually thought your risk was going to be. And we'll go over an example of this here. But when you think about the market, guys, if things start to go against you, there are certain breaking points in which you will see that the trade probably isn't looking as good as it should anymore, and it's probably time to get out. Now, by preserving that capital that you were using for that trade, well, it gives you even more opportunities to capitalize on further trades in the future, which is why trading this way and thinking about the market in this way is able to make you and myself extra tens of thousands of dollars, because we're able to limit our losses when we're already managing risk in a very, very smart way anyway. Now, let's bring this chart over here and go over an actual example of this. So with the day trading or the swing trading course strategy that I just released to you guys, again, it is 50% off right now for both the day and swing trading courses right now. It is buy one, get one free. So if you guys are interested in that, make sure you guys check out that link down below. The day trading course, absolutely epic. 0 losing months in 2023. Men lie, women lie, numbers don't. In the swing trading course, guys, is the exact strategy screener that I use in order to hit those multi-hundred and 1,000% gains. And I actually send you guys the list of the stocks that I'm looking at every single week here too. But let's get into this right here. So when we're looking at this chart right here on Home Depot, I was looking for a break of these levels to the upside and a potential move higher. Now, what did we see? Well, on this day, Friday, we saw this nice break to the upside here, but when we come into the trading day this Monday, well, we saw Home Depot starting to move to the downside. Now, again, Home Depot is not a stock that I would typically trade this strategy on, but the setup was looking so good, and it had shown that it was moving very aggressively over the last couple of months here, that I was willing to take this trade. Now, what happened in the pre-market? Well, we did see a little bit of news coming out saying that Home Depot was getting downgraded, and after a day like this, doesn't make a whole lot of sense, but there are certain things that you need to understand as a trader here. One, you have to have your overall risk management set up beforehand. When we talk about, especially with our swing trades and absolutely on our day trades, we are only really risking around 1 to 2% of our portfolio on any given trade. Remember, less trades, more profits. I need you guys to be hunting for those high quality setups, which is, I mean, again, exactly what we show you guys how to do every single day here. But if you're already trading with proper risk management, and on these swing trades, I like to do what's called sizing for zero, or taking a position size that I am perfectly okay with letting expire worthless. Now, again, I do use a couple of these levels here as my risk. So in this example here, to this first take profit on Home Depot, we were looking at about a 1 to 4 risk to reward. So if we're risking 1%, we're expecting to make back about 4. But as soon as Home Depot opened the day on Monday, and we saw this already aggressive move to the upside, and it starts moving back down into this red area here, why would I then wait for this to come down and hit this level as my stop? To me, that doesn't make any sense, because we already showed a lot of aggression coming in here on this past Friday. Coming in on Monday, all of that was erased. So to me, when you look at this chart here, everything about it is saying that this was a false break to the upside. There is no reason for me to sit here and say, okay, well, maybe it still could work. There's capital out there at risk. Again, our risk is already predefined, but we can still take the vast majority of that capital back, put it into another trade that looks a lot better. Now, this trade for me was a very, very, very tiny loss. So there was really nothing to do here other than to take the cash back and wait for more solid trade opportunities. And again, when obviously I know a lot of you guys who have stuck around this channel for a while have seen this, but when these trades that I show you guys and that I teach you how to identify start to get going above these certain key levels, well, the moves are very quick up to our take profits, and we're able to get out with very, very substantial gains. And when I start to see something like this happening, obviously the setup starts to get invalidated. So what is the overarching thing here that we need to understand? It's cutting your losers quickly, and then again, obviously being able to hold your winners up to those full take profit levels, which obviously is something that we talk a whole lot about in my educational curriculum here. But cutting your losers early, guys, isn't just a form of risk management. It's making sure that your risk management is actually fine-tuned. It's getting that last final touch on your risk management to make sure that you're not losing when you don't necessarily need to. In this example here, again, my risk was already predefined. I was not going to lose in any case more than 1%. But when we look at this chart here and I'm able to get the vast majority of that position, that cash back into my account, well, that trade wasn't necessarily a loss then, was it? It was in the case that I actually lost a little bit of money, but not the full amount that I was actually willing to risk on the trade. And I still have that cash to then go use for those other trades. This is incredibly important because if you start to add up a lot of those losers, again, it's going to detract from your cash balance and your gains into the end of the year. And if you just think about it in terms of math, if you're able to decrease the losing positions and the losing trades that you have, even by a little bit, it gives you more capital to go out in the market and capitalize even more in your P&L on the trades that are actually the big winners. So you have the effect of decreasing your losses, putting more capital then as your account starts to scale up into those winning trades, and you're able to capitalize more. Now, again, obviously that's a very simplistic way of thinking about this. Sometimes these are going to gap down and you're actually going to lose that full amount that you were willing to risk. But again, that doesn't happen very often, and we're really not getting to that 1% full risk hardly ever. And when these trades play out, again, for those of you guys that are new, we can go through a couple of examples. Here's one on Mara that we took absolute crazy advantage of right here. Mara right here. I believe we also have a firm. I actually wasn't able to take this trade here, but I know a lot of you guys were and absolutely knocked this one out of the park for like a 1-17 risk to reward. Again, when these start to get going, they usually don't stop. And when you start to see things like that Home Depot chart starting to move to the downside, it makes the most sense for us as traders to come in and limit those losses so we can preserve our capital and make sure that we're fully capitalizing on the very, very solid trades that are always presenting themselves to us. So guys, that's going to wrap it up for this one. If you guys did enjoy it, make sure you guys hit that like button down below. Hit that subscribe button if you want to see more videos like this. And if you have any questions, just comment down below and I'll get back to you as soon as I can. Other than that, peace.